So by and large, it's been a good week for markets. The key bits of news were firstly the OPEC decision yesterday, where they have extended that 1.8 million barrels per day cut to oil production through to the first quarter of 2018. The market was expecting this and hoping for a little bit more, so the oil price was fairly weak on that announcement, dropping around 4.5% yesterday. We've also had a weaker sterling, and that's been on the basis of a disappointing GDP Q1 number for the UK. Came in at 0.2% growth. This is in comparison to 0.5% for the Eurozone and Spain, which was a standout at 0.8% growth in Q1. We also had the YouGov poll, which showed a narrowing of the Conservative lead in the polls for the general election. So we've had a weakening of the pound on the back of those two bits of news, and we've had some weakness coming into those commodity currencies during the week. We've also had a slightly firmer bond market for developed market bonds, particularly in Europe, where those GDP numbers were pretty firm. In terms of the sectors, we continue to see IT or technology perform extremely well. It's another very strong week for those stocks. So we've now got Facebook, Apple, Amazon up over 30% this year, and Google up over 24%. So the S&P, which is up 8% this year, if you strip out those technology stocks, it's only up 1.4%. So really been driven by that sector, which plays into this view that the world is globalizing and structurally changing. So you need to go to where those unique businesses are listed. One of the side effects of that very strong performance in technology has been that growth as an investment style has really outperformed value since January. Here we've got, after the election in the US, we've got a big outperformance of value against growth, but that really has turned round year to date, as you can see from this chart. And that coincides with a sort of lull in economic data momentum and a reversal in bond yields. So as we go into next week, where we've got a lot of macro data, it's going to be a very important week for markets and for that growth versus value trend, which feels quite extended on the growth side. So we've got the ISM number coming in. That's always a key indicator for GDP growth. As you can see here, since November 15, it's been pretty strong. We've had a bit of a reversal and a pullback over the last two data points, so it'll be interesting to see whether that's stabilizing, albeit at very positive levels of growth. And then we've got the jobs number, which will come through on Friday. The expectation is for 176,000 additions versus 211,000 from last month, and the average hourly wage rising at 2.7% versus 2.5% last month. And we saw bond markets firming a touch into next week, and those bits of data will be very key for where bond yields are going, and therefore where the direction in terms of those equity markets and the growth versus value moves from here. In terms of the week ahead, it's a very quiet week. We've been through the reporting season, so there's very little to talk about. We've got Michael Kors on Wednesday, Johnson Matthey and a few others on Thursday. What really is the focus now is conference season. So there are around 250 conferences next week with companies speaking at those conferences. So that's probably where the market will get its steer in terms of the individual companies. That's it from me. Thanks very much.